I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, good to be with you.
U.S. sentiment running very high, positive. Small business positivity hasn't been this high since Ronald Reagan back in the 1980s. What is that going to do to the markets here?
Well, it is fascinating, and that number, and also there was a chart with it, and it soared, in the last couple of months straight up. And there's no wonder, because you have a pro-business administration, or will have a pro-business administration. And I don't know that you've had a pro-business administration since Coolidge in the 1920s. Well, Reagan was attempting to have a pro-business administration, but he had to face a Democrat Congress and Senate. So, whereas on the same reform in the early 80s, which through the 80s went on, and Mrs. Thatcher in England had a parliamentary majority, and that's a lot of power. And in the U.S., as I said, Reagan had the presidency and the administration, but the House and the Senate were Democrat. But in Canada in the 80s, Mulroney had the parliamentary majority and could have done a whole lot of reform, but he never understood it, just didn't get it. So anyways, now the U.S. has a pro-business administration and a Republican House and Senate, and I read that it is the strongest Republican position when you include state legislatures and governorships and everything else, the strongest position they've had since the 1920s, which is, so the opposition is somewhat fractured, but it will, the media will never quit, because you can't, the political movement of the last 20 years has been very ambitious, and the checks and balances of government were quite impaired, because it was usually you have a judiciary that's independent, you have the legislative side, which is independent of others, you have the administration, the executive side, and you also have the media, which was used to be proudly called the Fourth Estate. But what this transformed into was a monolithic Democrat left party with its own media. And it was formidable. But in history, you have had times where you have a popular uprising, and I've traced those back to even ancient Egypt, where the governing classes get arrogant, confident, and well-off, corruptedly well-off, and the ordinary person is not doing so well, and then there comes an instant when the ordinary people say, hey, this isn't working. And in ancient Egypt, the palace would be protected by palace guards with their spears, and they were not of the governing classes, they were just ordinary folks. So at an instant they would say, oh, why are we protecting these plutocrat governing classes, and lay down their spears? And then you would have what the historians called an interregnum, anarchy, if you will, but it was probably just quieter government. And so this was very similar to what happened in Eastern Europe in the 1980s, late 1980s. The authoritarians in Russia and East Germany and Poland, for example, did at one time think about sending in the tanks and the guns as they did in Czechoslovakia in 1968 and in Hungary in 1957. Those uprisings were quelled brutally. But this one in 1989, the authoritarians lost the will to impose authority, and virtually at the same time, those at the bottom lost their complacency to submit to such authority, and you had the change. And this is what is going on now. It's very exciting, where all of a sudden you see the tide change. And what I've been writing for the last year or so was that the uprising is the movement. It would find a leader, and it would win the election. And the leader happens to be Trump, who is not polite, but it seems to be working. The people took to him. But mainly what it is the uprising is the movement, and Trump just happens to be the leader, and I believe his executive abilities are coming in now with the cabinet that he's putting together. These guys are going to be very good and very tough, and you will have to be, because the authoritarians essentially have been in power for 100 years. But, you know, the authoritarians that are in office now, Trump and, Obama and whatnot, they don't really know that the movement has been on for 100 years, but within there seems to be a tribal memory where you say, hey, this is not working. You look at the promises of the governing classes, you look at how the privileges and perks they have, and then you say, how much am I getting of it? And I saw the numbers just the other day, a chart went by, that there's, in the ordinary wages in the U.S., there has been no net advance since the 1970s. So then you wonder, the economy expands, where does it go to? Well, of course, the riches are pouring into wasteful governing classes. So, and this is what we have. It is a classical uprising. It will be successful, and to be vertical and upright and watching it now is a privilege. It's wonderful. So, well, this now is in the market. You've got, as you said, with the small business sentiment, is the most bullish. No, it's had the sharpest rise since 1980, which was when Reagan won the election. And it's been the highest since 84, when all the, everything was positive, and before you went into the next contraction. So, anyways, yeah, you've got that. So now you look at the markets, and 4 or 5 weeks ago, different sectors, generally, the hot ones like the banks, generated technical excesses, measurably technical excesses, and from which maybe some weeks later you'd get the markets rolling over, which you've been going sideways. So here you have the conundrum where you have an overbought market, too bullish. You have the most exciting change towards freedom and a pro-business change in politics in ages. So, and you have the inauguration on, what is it, 20th, I think. So, I think a lot of the good news is discounted, but it will take a tremendous effort and a lot of willpower on the part of the administration to actually bring in change. I believe that they will be successful, but it will take some time. So the trick is to go from an overbought market to when it actually rolls over, and that's difficult to say. Our work on crude oil was looking for a brief correction in January. We may have got that. It only took 3 weeks. And then favorable out to perhaps March. So it's going to be fascinating to watch how this all works out.
Well, take a look what's been happening with the Canadian dollar. Last year at this time, it was plunging like a submarine with screen doors. Now it's at 76 cents.
Yeah, with this optimism, I've sort of been calling it a positive wave, which, looking back on it, seemed to begin around June. And, well, for example, you ended up with the U.S. third quarter GDP, which ends at the end of September, was positive. Even with all their rigging, it was still a good quarter. And you had Brexit, which at the time was considered negative, but looking back on it, it's positive. And then you had the election, which is positive. So it's uncertain how long the underlying positive wave will run, but we do know that things are overbought. So we certainly wouldn't add to new positions at these levels. It's very, well, it's a very popular trade to be long the stocks and long low-grade bonds. And that's the other one. This thing has been fabulous since about this time last year, January, February. Remember, crashing crude down to $26. Credit spreads widening. As junk bonds got marked down in price and up in yield, it was a panic and became very oversold, and then has been rebounding. But when you get the trend going for junk bonds going up in price and down in yield, when they get going, it can be very powerful. It is still running. We're looking for some excesses in here. They may be developing, and who knows how much further it'll have to go. So let's wrap it up on that one, say the financial markets are precarious, and with enthusiasm, you have a very rare political reformation going on, which will eventually prevail, and all the very positive stuff with it. So we're just watching, see how far it'll go.
We'll have more with Bob Hoye right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Bob Hoye. Bob, gold hit $1,200 an ounce, something that it hasn't looked at for quite some time. Is gold going to be more positive in this new year?
Yeah. Again, this was a move tied to the U.S. dollar index, which had been very strong. It got up to 103, and we thought it would correct back. Actually, 103.86 was the high on the DX. And we thought it would correct back to about 102, and it got down to a little less than 101. So that was the right recipe for the gold bugs to mark up gold. But, you know, and looking at it, one of the features of a post-bubble contraction is that the senior currency becomes chronically strong against most other currencies and most commodities, which has been the case. And that's very difficult to get very excited about silver and gold, although the pundits who wish to be famous are still calling for $10,000 gold, but I can't see that. So what we do is look at the precious metal sector with the eye of an investor, and the interest is in gold's real price. It's not so much gold going to, 1,200 or going to 12,000. It's whether the mining business is profitable. So you can hypothecate a world where, sure, gold, let's say it goes to 5,000, but what happens if crude oil goes up even further? And that represents an important cost of mining. So hey, it may be great, but you're not making any money. So in disinflationary periods, gold mining business actually does well because usually the costs of mining go down relative to the price of gold bullion. And this is what's been happening. If you take gold and deflate it by the producer price index, it's been improving for a little over a year now. And it's our case that as that goes up, it represents the cost of mining, or the spread between what you get in bullion price and what it costs you. So underneath it all, earnings for the sector are likely improving and will continue. And it doesn't matter whether the price of gold is fixed or trading or floating or whatever. So this is where we emphasize gold's real price and look at gold shares as an investment. And gold shares came down recently. We should go back to July when the technicals got way overbought, and the advice was that there would be a significant correction for the gold sector, and it actually turned out to be a little more significant than we thought. But nonetheless, we in November started looking for the positive signs, and one of them is the price of gold shares beginning to outperform the bullion price, and that built a base and broke out a couple of weeks ago. So the fundamentals, let's call them technical fundamentals, for the precious metal sector have turned positive, and it's the kind of market where the next leg up on a cyclical bull market has likely started. There'll be some trading opportunities, but in a post-bubble world, the most reliable big feature has been is that the gold mining business makes money, and eventually the stocks become the darlings of the whole market. And that's a good thing to look forward to.
Bob, thank you so much for chatting with us.
Yeah, Jim, good to be with you, and we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. If you have any questions for us or Bob, you can email us at info@howstreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.